Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. The top 5 holdings for millennials are Nasdaq-100 stocks, according to the Apex Millennial 100 Stock Pulse report, and they are seeing multi-generational support. Joining me to discuss is Bill Capuzzi, CEO of Apex Clearing. Bill, it's great to have you with us as always. Welcome back to Trade Talks.
Good to see you, Jill. Thanks for having me.
All right, now tell us about the Apex Millennial 100 Stock Pulse report, including demographics and the holdings, of which the top 5 are Nasdaq-100 stocks.
Yeah, sure. So first, let's just start. Apex is a custodian, and what our job is to effectively hold and protect the assets of end investors, and we support a number of fintech front-end platforms. Webull, Stash, SoFi, most of the fintech providers use Apex as their custodian. And as such, we hold roughly 10 million customers on our books. The average age is 31 years old. The average account size is $2,300. So we're squarely focused, by and large, on the millennial generation in terms of our client base. And to your point about stocks, not too surprising, I guess. Then the top 4, the top 5 really haven't changed quarter over quarter, frankly, year over year. Right? When you look at the names, Apple, Amazon, Tesla, Microsoft, those top 4 have stayed pretty steady for the millennial community that trades through Apex.
Are they turning to fractional trading? It's interesting. Apple announced a 4-for-1 stock split this week. It's citing a desire to make the stock more accessible to investors. Are you seeing millennials turn more to slices or fractions of shares?
Yeah, it's funny. I was watching CNBC yesterday, and somebody was talking about, hey, why would they do that? Because everyone offers fractional shares. And the reality, Jill, is that's not true. Most of the custodians can't support fractional shares today. And so there was a desire by Apple to lower the price to create better access to their stock. And fractional shares is roughly 50% of what was traded in the second quarter for Apex. And the concept is, to be clear, you're talking about less than a share, right? So folks that want to buy, let's just take, as a good example, Amazon trading at roughly $3,100. I mentioned before the average account size is $2,300. So you have accounts on our books that don't have enough money in total in their account to buy 1 share. And so the concept behind fractional share trading is to allow folks to buy less than 1 share. And so in the case of Tesla, right, or in the case of Amazon, to be able to buy $500 worth of a stock. And the concept there is, hey, let's democratize investing. Provide the ability for anyone, anywhere to have ownership in whatever stocks that are most important to them.
And they could still participate in the same moves that an institutional investor was. I mean, a percent move on your investment is a percent move on your investment.
Exactly right. Exactly right. And again, it was, there's been a number of moves over the last couple of years to, again, lower the barriers to entry, right? Think about zero commission. Started with Robinhood, Schwab, and then everyone else followed afterwards. This concept of fractional share investing is just another attempt at creating, kind of lowering, like I said, those barriers to entry, especially for people sort of John Q. Public, Main Street, allow them to access the stocks. And over the years, as you know, most of the stocks have not split. What Apple did yesterday is anomalous compared to a whole bunch of other stocks, which have just kept rising in price, which makes fractional share trading really important for the younger generation.
Yeah, when they announced the 4-for-1 stock split, you could almost hear everyone do that virtual, oh, wow, when they announced it. And I agree with you. I think it really is an interesting move. Now, did you see a spike in volume and account openings in Q2?
Well, so I'll tell you. So first of all, in terms of volume, the number of trades that were put through went up about 30% quarter over quarter, and year on year we're up over 200%. So last year to this year, 200% increase in the number of trades put on, and it's not too surprising. What was surprising to me was that in the first quarter, obviously lots of volatility in March. Went into April a bit, but I expected things to sort of slow down as they typically do when you hit June and July. And frankly, it's kept up in terms of June was the most active month we had so far this year. And the reasons,
Yeah.
yeah, well, go ahead, Jill.
Well, it'll be interesting to see if this trend continues, that people have had the time to have access to the stock market. It is more democratized, as you had said, and it's not simply just a derivative off of COVID-19 and being home. It seems to be that it wasn't just a 1-month phenomenon.
Well, part of it, like you said, people were home, right? And I think, again, back to our customers, our, Apex's clients, they're mobile first. So people are home, they have a little bit more time on their hands given the situation, and the fact that they can actually buy and sell stock on a handheld, right, on their phone, made it a lot easier. And I think that exacerbated by the fact that there was no sports betting, I think and then lastly, that there was a ton of volatility in the market, right? So you had VIX spike into 80. You put those three things together, created this very unique situation. What I do think is going to happen is, I do expect for August to slow down. People go away people will take some time away from the markets. Given that it's an election year, my bet is things will pick back up. Let's call it mid-September, after everyone gets their kids settled at school, right in through the election. I think things will pick back up, volatility will pick up as well.
All right, Bill, as always, thanks so much for joining us on Trade Talks.
Great to see you.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.